Hello, everybody. So, yesterday evening, two of my stocks reported their earnings, and they both reported great earnings. These stocks are DLocal and Nubank Holdings, but DLocal is up like crazy as shorts are likely trying to cover their position because DLocal did very well. They posted great earnings. So this is the growth numbers. You know that on this channel, I tend to mostly focus on revenue growth. That's the most important thing to me because I invest in product or service adoption, and revenue numbers don't lie, sales numbers don't lie. And if they grow fast, that means that the service is getting adopted. And in the case of DLocal, there is no doubt that their service is getting adopted, right? A lot of international companies are deciding to do business in emerging markets, especially Latin America, and they're deciding to use DLocal for their payment interface and to get local customers to pay for their services. So that's why our product is doing very well. And actually, we have a case of acceleration here, because if you look at year over year, they're reporting 59% growth year over year. And in fact, you may know on the channel, my favorite calculation is to look at quarter over quarter and then annualize it. So of course we have a great quarter over quarter number, so they're reporting it. They're like, look, we're growing 17% quarter over quarter. That's amazing, because if you annualize that, and if you assume they're going to keep growing at 17% per quarter annualized, that's 87% annualized. So this is a company whose growth, per the way I usually analyze stock, whose growth is accelerating, and I love to see that. I mean, this is a company that has been growing really fast, and the market has not rewarded it whatsoever. The stock price has traded, totally based on the volatility of the price to sales number, not really on how high their sales are growing. And as far as the business goes, the gross margin for the payments business, or for a lot of these fintech type business, the gross margin is not going to be as good as, say, software. So it's better than hardware, but it's not software. So that's why I say it's only 44% though. It's fine. It's fine. It's the payments space. And what can we say about valuation? Because on this channel, I care the most about asking the question, how much am I paying for that growth? Because my style of investing is to invest in that product adoption curve, and I want to use revenue as a proxy for product adoption. And I don't want to pay too much for a company who's going from 5% of a population to 70-80% / mainstream, right? DLocal is early on in the adoption of its service, but I don't want to pay too much for a company whose service is getting adopted. And to me, the most important question is, how much am I paying for that growth? And I use this metric, enterprise value over gross profit over revenue growth. Why do I use gross profit and not any other metric? Because hyper-growth stocks like DLocal or Nubank, they're only optimized for gross profit. They're not optimized for net margins. They keep reinvesting heavily in the business each time. So, of course, your bottom line is going to be a terrible metric, not good to use for that. Gross metric though is a decent metric to use for that, and I'm asking, so how much am I paying, right? And this is a spin of the PEG ratio, the price to earnings to growth. That's a spin on that, except I'm using enterprise value because enterprise value removes debt from the equation. Gross profit is more accurate for an hypergrowth stock, and revenue growth is the same as Peter Lynch's formula. And what do I get as far as the cost goes? I get a 0.4, so slightly below average. The average typically is between a 0.5 and a 0.6. So this stock, as far as the way I value hypergrowth stocks, is slightly cheaper, but I updated the enterprise value, right? I updated that. So you may actually know that this stock used to be much cheaper just 2 days ago. The stock shot up almost 80% in 2 days. And therefore, I was trimming DLocal before, and I'm still trimming it. And this may be the end of my trimming. I may be out of shares because the stock is up 50% today alone. And you may ask, so why am I trimming, right? This stock is doing very well. The growth is doing outstanding. The stock is accelerating. Why am I trimming? Well, I'm trimming because there are some companies companies that I believe more right now, and I'm a long-term investor, but right now there's some companies that are just so mispriced, way more mispriced than DLocal. DLocal I view as roughly fairly priced right now, but you have companies that are like grossly underpriced, like HIMS is an example, but also Tesla. I mean, I've been studying more Tesla the past 2 weeks. I can't believe how cheap this stock is, and it's my number one position, but I'm still adding to it. The risk to reward ratio for a stock like Tesla for me is outstanding, and so right now there's these companies that I believe in more. That's why I'm planning on taking that opportunity, that plus 53% today. I'll take it and I'll trim more in order to add to my highest conviction stocks. Also, my exposure to Latin America is a bit high. It's high, you know. As you may know, I love stocks like StoneCo, like Mercado Libre, like Nubank. And so, do I really need to have another one in Latin America? No, it's a little bit high. And I've been very critical about. This stock because of the short report of Muddy Waters in the past, and I haven't been critical of the management or anything, but the way this stock has reacted to Muddy Waters is insane. I don't understand why this short seller has such a crazy impact on these stocks. Right? Many short sellers don't have a big impact. Muddy Waters, for some reason, whenever it attacks a company, it has an insane impact. It gets picked up by Wall Street. And, you know, you can explain that major drop at the end of 2022 from Muddy Waters, right? And that was a major drop, just as strong as the up that we're getting today, the 53%. That was a drop equivalent to that just with one short report. So who knows if we're not going to get another short report between a month and, 2 months from now. Who knows? And then the stock drops again 50%. I don't know why this stock is so sensitive to short reports from Muddy Water. Sometimes you'll have a short report, the stock won't even budge, but this time it budged so much. And to me, that's always a overhang, and that's a problem, and that's unfortunate, and, it's not really fair to DLocal at all. Nonetheless, the stock is rallying today. Why is it rallying? Because I think a lot of the shorts have to cover. I think that's why it's rallying. Also, the Mercado Libre CFO was appointed as co-CEO, and that was announced yesterday. And the stock already pre-rallied on this news, on leakage of this news yesterday. So that's why the stock is up. Great for DLocal investors. Great stock, in my opinion, no investment advice, but great stock. Is just that me right now, there are some companies that I believe in much more, and that's why I'm trimming. So let me move on to the other stock that reported earnings, and I'm doing the same type of analysis with my own metrics, if that makes any sense. And that stock is Nubank. So what happened to Nubank? Nubank, the growth numbers are still outstanding for Nubank, actually. You can see their growing customers really, really fast, and then they're turning these customers into revenues, and then those revenues are converting into gross profit, which is then converting into net income. Although, for my style of investing, I mostly focus on gross profit and revenues. Customers precede revenues. They're an important marketing metric. You don't want your revenues to only come from quote unquote milking your existing customers more. No, you don't want that. You want your customers to grow steadily along with your revenues, and ideally, if you can grow your customers at a speed, and then your revenues at like 150% of that speed, that's how you get exponential growth, right? Exponential growth. You grow with the number of customers, and you sell more to these customers every time, and you do that multiplication, and you get an exponential growth curve, which is amazing. But let's look at Nubank's revenues. So, as you know, in my typical fashion, I love to look at quarter over quarter. So if I look at quarter over quarter, divide the latest number by the number prior to that, and I am getting a 15.4% quarter over quarter growth. So that's amazing. We grew revenues 15% from Q1 to Q2, and if you annualize that, of course, that's 77% growth. So this is a stock that is growing extremely fast, very, very, very fast. And as far as their gross margins go, they've actually increased gross margin at 42%. Now it gets a little muddy in the way they calculate gross margin, depending on how they view and allocate provision for losses. So always take gross margin on a fintech with a grain of salt. That's just what I'll say. But anyways, reusing those numbers, this is what I'm getting for Nubank using the latest reported numbers and using the latest enterprise value valuation. So for Nubank, of course, 77% revenue growth annualized right now. So that's kind of my expectation. If you look at analysts have similar expectation for the next 12 months. So at 77%, gross margin 42%, updated evaluation, and I am getting its stock at a 0.16. So significantly under the average stock in my coverage universe. Keep in mind, I only cover growth stocks. I don't have any regular stocks. I only have stocks whose products are getting adopted. I only have stocks that are early on. I only have stocks that most of the market disagrees on with me. And even with that, they actually are much cheaper than the average, about 3 times cheaper than the average, and they are 2.5 times cheaper than DLocal. So Nubank is 2.5 times cheaper than DLocal, which is why, as I trim a little bit of, if not all, my DLocal today, I will be adding to Nubank as part of a deal, because I do like Nubank. It's my preferred fintech compared to SoFi. Actually, I still prefer Nubank over SoFi. Although they've been in a tie. Like if you follow the channel, there's a few months I like SoFi better. There's other months I like Nubank better. So it's really tough to make a choice between these two. They have a similar thesis, different geography, called region. But anyways. This was not investment advice. This was just entertainment. I hope you were entertained. It's great to report on some good news, changes from yesterday and C Limited, which are bad news. Please appreciate, I appreciate your likes. Please subscribe. Have a wonderful, wonderful day. Thank you for watching.